Hello YouTube, welcome back to my channel. This is my 6-week update of investing. So this is my investing week of May 11th through May 15th. As you can see in this first picture here, I bought 4 shares of PEY for roughly $12.95, which was a total of roughly $51.80. Obviously some weird rounding errors in there with the fractional shares. And that brings my grand total for what I have invested, if you look at the cost basis, of just over $1,500. Obviously, with the dividends I've been receiving coming back. And what I forgot to mention, going back to what I did receive about $1.72, I believe, in div for the dividends for the month. I'll be going back to showing you a future chart of that as well for what I'm doing for the month. But I've been showing this positions chart, and I was looking at it as, unless you're really paying attention week to week to see how my progress is going, I created a new chart. So it's basically the amount that I invested in a black line versus the market value in red. So you can see, it'd be easier for you guys to see and represent of how am I doing, like am I gaining money from the market growth versus what I'm actually throwing in for investments, instead of trying to look at the cost basis versus the market value. Obviously the day changes there for helpful, but this would be more so of I'm going to start it week to week. Will help me stay more consistent, making sure I pull dates every Friday when the end of day is on Friday, or say Saturday, to pull these kind of charts. Then going back to the monthly dividends, you take the 23 cents that I had from the previous video, add on to the $1.72. You'll see my dividend for the month now is $1.95. PEY should be paying out here. I should have a date coming up on this coming Monday, which is today, when this video is being uploaded. And then that should be paid out towards the 28th or 29th. So I don't want to count my eggs before they hatch per se, but I'm guesstimating I'll be at about $3.55, but we'll have to wait and see how that updates. And then I just kind of want to go back to my portfolio allocation for how I'm investing. You can kind of see here, nothing really changed with me buying more shares. My customer staples are high, which I don't mind because the whole pandemic and recession-proof idea of it. I'm low in tech. That's something I kind of want to get at. I'm kind of high in energy. I'm also a little bit low in healthcare. So I'm just trying to look here and think, do I want to buy another ETF that is just focused in those areas? Because you can buy like just a technology ETF. Or do I want to buy, say, an ETF that is broad, that is more focused into tech, into healthcare, less in consumer staples, less in energy, and so on and so forth? But I really don't know. And then one thing I wanted to show you guys was the main ones that I'm buying and what their breakout is and why these values are where they are. So first, if you look at PEY, you see that they're heavily in the financials, or heavily in the consumer staples, and then utilities. So that breakout for how many shares and the dollar value of that, it is relatively high, which leads to what I have when it comes to the total market segment. Then if you go and look at SCHD, again, 20% of that fund is in consumer staples. They have 18% in tech, and they have 16 industry, and then 12 in healthcare. So it's a little bit better. But I'm still going to be putting a lot into consumer staples. Again, I don't mind it. It'll help me with the tech. So this might be where I push more money into SCHD. The only difference between these two is that SCHD pays out quarterly, where PEY is monthly. So you can say the monthly payments will help me grow this a little bit faster. And then you kind of go to my dividend chart. You guys can see here, last month was $2.76. This month, as of right now, is $1.95. So this is kind of where I'm sitting at. Just a little quick update. Nothing's getting too crazy yet, but based off of going back to my position table here, NOBL historically has been paying about like 30 cents, 32 cents, something like that per share. So that's about $1. SCHD, again, about 45 cents per share. So that'll probably be up currently with the 13 shares. If you crunch the math real quick, assuming 45 cents per share is $5.85. So coming July, I'll be seeing roughly a $7 spike, assuming I don't buy any more shares, which I'll probably buy a couple more shares of SCHD. I'm looking at buying potentially another share of BNDW here, try and keep that 10% in bond. If I truly wanted to focus on dividend payments and want to be a little more risky, I would say forget the bond market and just push more into PEY and SCHD. But I'm trying to stay broad. I'm trying to stay diverse the best as I can. So I'm like seeing that I'm getting like $3, and it's looking to grow this month. It's going to keep on growing. I will have my spikes for the quarters, but all in all, I'm excited about this growth. I'm happy to see it grow month by month. And I hope you guys like these charts. I'm going to try to keep them going forward. So as I buy and as I get dividends, I'm going to keep them going. And then, maybe every quarter I'll keep a rolling tally of how much money I made per quarter. I want to, I'm trying to inspire you guys to do this if you have the ability to. I'm not trying to do anything too crazy here. Again, I'm doing about $200 a month, $50 a week. This is not, this is something tangible for everybody. And I want you guys to see the ability of the time value of money within the marketplace. Obviously, I'm buying probably at a cheaper rate than you will buy into. So if I buy something for, like, again, today, PEY was about $13 a share. Well, for 6 cents per share, you might be buying it in the future for $15 a share. Who knows? But it's the whole idea, the premise behind here's what you can get back for your money, and you have to look at what's good for you. Again, disclaimer, I am not a financial advisor. I have an engineering degree. I'm calling myself the financial novice because I've never invested in the stock market before besides target date index funds for my 401ks. So this is a learning process for me. I hope you guys are enjoying this. It's been 6 weeks, nothing too crazy. It's my 5th video. If you have any questions, concerns, critiques on what I could do better, if you want me to explain anything a little more, let me know in the comments below, and I'll see you guys in the next video.